Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, November 16th, 2021. The S&P continued to move higher. And as we were discussing on yesterday's update, I did not find that what has now been labeled as minute wave 4 overlapped minute wave 1, which kept the minor 4 in place at last Wednesday's low at 46.25. Now, from that level, we've now, it appears to have put in waves 1, 2, 3, and 4 of the minor wave 5 up. Now, that leaves this minute 5th wave, which projects now to complete upwards towards 47.23. That would put in a new high. And that's what I'm looking for out of this minor 5th wave, new high above 47.11. We got up to 47, almost 10 this afternoon, and that then failed, and we closed off of that level, still higher on the day. Now, what's going to start to become, I think, a little bit more difficult is that we have several indicators through Fibonacci extensions that the market does have potential to run much higher. And even if I'm going past here, we're getting up into, for a 5th wave, pretty high percentages of a move that it would be over the 3rd wave. So here's what I am leaving open, that the 3rd wave possibly is not complete, and what it's doing now is completing. So in other words, the count would be 1, 2, and then likely maybe 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of the larger 3rd. Now, that remains a possibility. It's a strange pattern, and would not be the happiest with it. Otherwise, I do think that possibly then what we're getting here is 1, 2, maybe 3 of 3. So in other words, it's like we got 1, 2, and then it subdivides again, 1, 2, and then this is 3, and this is 4 of this 3rd, and then we get another rise up, and that takes us to that original level that I showed at 4,715, I believe. I had some resistance there. And if it could get there, finish the 3rd, or possibly even here, and just finish the 3 of 5, right? Minute 5, and now we're in sub-minute, so that 3 of 5. So I think we still got one more rise up for that 3 of 5, a drop back down and another 4, and then that final rise, which it could extend in and of itself. But I would like to see this get up towards these upper levels to complete minor 5. So all that is necessary, if we're looking at the guidelines and Elliott rules, is that in a 5-wave move, in a 5-wave impulse move, wave 5 could end in a failure. So that is possible. And up here at these highs, I wouldn't be totally surprised, because a lot of this movement has just been people scratching their head going like, why are they continuing to just move in and buy and buy and buy? And I'm sure there are several reasons, and I'm sure that if you watch the news or you read the news services, they're going to give you a zillion one reasons. This is feeling, this is this is that, and to back up why the markets are moving in a particular direction. One chart of note, and I'm just going to show it because it was brought to my attention today. This is the dollar index. Now, if I take this out to the daily chart, Look at this move. The dollar has just gone straight line up. And that's, so we're seeing a very strong dollar. Now, there are several schools that you could go through that the strength in the currency is not necessarily convertible into a bullish outlook for an equity market. It does kind of suggest that the dollar's moving in anticipation of interest rates shifting and moving higher. But the way that I see it, a higher dollar is inflationary. And and what I see happening is that all of this is eventually going to stop. The bonds did start higher, then they actually sold off, not a great deal, but they sold off at the highs and started dropping back below on the 30-year, below 160. And that fits more with the rising dollar. Now, gold doesn't like the rising dollar, so it declined today. But initially, they were buying gold. So we're getting a lot of mixed signals that were always very dependable prior. And so what does that suggest? To me, it suggests that we remain in this topping process. And it is, again, a completion of a very long-term advancing sequences. If we're going all the way back to a super cycle level, on that super cycle level, it is just completing a third wave, which is normally the longest and the strongest. But guess what? That third wave started in 1932. So this one's been underway for quite some time. It'll be 90 years next year that this wave, this bull market, at least from on that degree level, has been underway. The latest segment that really fits for me began in 2009. And that is the finishing cycle, the cycle wave, cycle 5 up. So from 2009, this has now been underway for 12 to 13 years, depending on when it stops. And then we can continue to break it down to see that all of these advancing sequences have been underway for quite some time. And so the topping process is going to take some time. And because what we're also seeing is that a shift from bullish to bearish, a shift from advance to decline, a shift from impulse to counter trend. So the trend may still stay in place, but we're now going to have a counter trend move to correct all of these different levels of advancing impulse waves. So this topping process continues. And we're getting a lot of calls for S&P 4,900. I have a number right up there. And it is 618. So minor wave 5 would be 618 of minor 3 at 4,900. So that remains in the picture. And if it really got itself going, minor 5 would equal minor 3 at 5,070. So these are just outlier numbers that are put together simply because of the Fibonacci sequence. And then the relationship between a fifth wave and the third wave. So we can come up with those numbers. But now the market does seem to be not very interested and giving these strong pushes that we saw within the third wave. Now that we're in the fifth wave, I expect a lesser move, but still, I think because of the topping process, we have a solid chance of this market moving to 4,900. How it wants to get there is where I've now got to figure out what the counts are. And so it's not necessarily fitting for 44,900 right now. What's fitting more is these lower levels, getting back above 4,700, which we did today, but getting back above, reaching 4,723 or 4,730, 4,044. We have several layers of resistance. 47.57, I think, makes a lot of sense to me because it's 1.618 for this in smaller fifth wave within the minor fifth. So it's the minute fifth of minor 5. It's the 5 of 5. So it makes sense. That Fibonacci sequence makes sense there, that it'll end here. That still completes this minor 5 because the only true requirement is that, first of all, the structure needs to produce 5 waves, but it needs to produce a new high above 47.1175. We almost did that today. So I would anticipate that between now and Friday, that we're going to get up and we're going to finish all this. And then we'll see what happens. But I do feel that we continue to have upside left to do from these levels. If the market starts to break down, number one, we're still 46.61. That would be one area I wouldn't want to see it get below, although now it probably could, but then I'd have to put a 5 up here. So we can't, if this is just going to be a pullback for within this little wave, it can't get below 46.87 before it starts to really break down and negate additional upside within this sequence. So let me open that up again so I can just show you. If we still have upside to go, it's going to come from, if I'm considering this 1, 2, 3, 4 are done, this is 5, and I got 1, 2, 3, 4, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So either way, I mean, I may have one more little dip, which we're doing now, and then still a rally up, and that completes the third of this minute 5. Then we do another pullback, and we rally again. And that's the one that I think is either going to have to show a lot of steam, or depending on how this all ends up tomorrow, to what levels are going to be reached. So that's kind of my concern right now, that it almost feels like these were nice moves and they were intense, but they were very light volume in terms of, you know, who's left to buy, kind of was what I was thinking. It's like everybody I think that wants to be long is long, and now they're just waiting for the next crowd to come in and go, okay, I'll agree, and they push it even higher. And so once again, we get into this situation where it's the market getting so top heavy that it's just going to roll over on its own weight and just turn into a downside move. All yet to be seen. But for tomorrow, I'm going to leave it like this. We shouldn't see too much more pullback. I'm again going to put this out there that I would not expect this market to move below 46.87 in the context of this move. Below that, then I'm going to have to consider this done. And I'm not sure, but if that's what the market tells me, then that's what I have to put into place. If it holds here and we begin to rally again, then I'd be looking for it to get up towards that 47.11 high, maybe up to 15, finish the 3 of this minute 5, pull back again, and then do that finishing run, hopefully up to like 47.23, 47.30, 40, up into that area. And again, depending on what's going to motivate the market to push. We still have earnings to come out. We still have some, retail companies that are reporting this week, and retail sales are already looking pretty bullish. So they may just take off on the hype that the consumers are out there spending money at retail stores. So we do have some bullish tone that could push. But again, I think we're in the finishing move. Downside, if it really starts to break down and starts to break below the 50, then again, breaking below 46.67, which is marking the bottom of wave 4, puts a completion to this whole wave. And unfortunately, I likely would have to label it minor 5. And if it doesn't create a new high, then minor 5 ends in a slight failure. It got to 9.75 today. This is 11.50, 11.75. It would have failed by $2. On the size of this wave, $2 is nothing. So that would be the scenario. If we start to break down, this ended here, and the 5 and the 5 and the 5 and the 5 get put on there. These are the situations that the market kind of is like backing itself into, and in terms of account. So market's going to tell us one way or the other. This is where I'm going to leave it for tomorrow. Again, it may be slow in terms of volume. The moves themselves could be good, but you got to be there and you got to be in the position as it's beginning, or you catch it. Otherwise, it kind of happens without you. Play with the moving averages, play against the Fibonacci, play against the Elliott, and have a great trading day tomorrow. The next update will be Wednesday, the 17th.